guys, welcome to my channel, or should I say, welcome back to my channel. If you're new here, happy to be here. I think we should start off where we finished. So we said we were going to go on to terminology, so we'll get through that. As soon as we get through that, we'll go into Webull. I'll guide you through Webull, and we'll go through all the stuff that's on Webull, all the stocks you can look up, all the indicators you'll use, like what is a Bollinger Band, moving averages, and the relative strength indicators. But before we get to that, we'll learn the basic terminology first, so we know what we're talking about in the next video. So today we learn about 10 to 15 different terms, and you'll know them then, and then you'll hear them throughout your journey of trading. Let's get right into it. Term number one, ticker symbol. So a ticker symbol is a name that a company trades under. So it's usually an abbreviation of the original name. So it's like Tesla is TSLA, Cosmos Energy KOS, Google GOG, and things like that. So that's what a ticker symbol is if you're ever here. Term number two, a bull market. So when someone says that stock's pretty bullish today, they mean that they think the price of that stock is going to rise sharply. And then opposite to that is a bear market. A bear market always means going down. So if someone says I'm pretty bearish about that market, it's on the way down. So don't even look at it. Term number three, an individual investor. What is an individual investor? It's an investor like me or you that's not part of a hedge fund or a mutual fund. It's just a sole trader trading on the trade market. Term number five, institutional investor. It's basically the opposite of an individual investor. So if you're a part of a hedge fund, if it's a mutual fund, they kind of pool their money together and then they invest all their money together. So think of the investment bank Goldman Sachs, that'll be an institutional investor. Term number six, a day trader. So what is a day trader? A day trader is someone who buys and sells a particular stock on the same day. That's a day trader. You usually have to have 25,000 in your account to be able to day trade. There is a rule set up called the pattern day trading rule, which is you're only allowed 3 day trades in a working week if you're under 25,000 euro. Term number seven, market cap, which means market capital. So this refers to the total amount of shares in a stock multiplied by the cost of the stock, which gives you the market capital. So this would usually give you an idea of how big the company is compared to other companies that are in competition with that company. It gives you the general size of that company. So like market capital of Tesla is a couple of billion now, so you know it's a pretty big company. Term number eight is the New York Stock Exchange, the NYSE. It is the largest exchange and it's made up of $14 billion worth of companies. The Dow Jones 30, so this is the 30 largest companies in the US. So them companies are put into one graph to show how the 30 largest companies in the US have done on a daily basis. Term number nine is share buyback. What is a share buyback? A share buyback is when a company buys back shares so there's less shares outstanding on the market. This increases attractiveness of the stock and makes profits in the company look bigger. Term number 10 is dividend. So what is a dividend? A dividend is paid out quarterly by a company to its investors as like a thank you for investing in our company long term. A company does not have to pay dividends, it's just a little extra for the investors to invest in. Term number 11 is a stock split. So what is a stock split? A stock split is when a company cuts their stock price in half to attract more investors. If I had one share of Tesla and they decided to cut the stock, I would have now 2 shares of Tesla for the same amount of money. It just increases the attractiveness to new investors. Term number 12, a market order. So a market order is when you buy and sell shares of a company at the price that it's currently trading at. So you just want to buy in at the current price. Term number 13 is a limit order. So a limit order is buying or selling a stock at a lower price. So you think that stock's going to drop by a bit, so you get a better deal. So you hit the limit and you can put away your phone, put away your laptop, and as soon as it hits that stock price, it will automatically buy it for you. Term number 14 is a stop loss. So you don't want your shares dropping a crazy amount, so you set a stop loss. So if you're away, you're not looking at the market, a stock drops, it will sell at a particular price that you set it as, so you don't lose money. Term number 15, initial price offering, aka IPO. Now, an IPO is the initial price offering for a company that is just becoming public. So a public limited company. So if a company wants to go public, so investors can invest in their company, that's the initial price offering that the exchange gives them. Uber just became a public limited company last year in October, and its IPO was $41. So that's what an IPO is. I won't burn your heads too much now. That's enough terminology for one day. Pretty thirsty on this Sunday afternoon. My mouth is dry. I never talked so much in my life. If you've any questions or anything like that, don't be afraid to DM me on Instagram or write in the comments on YouTube, whatever you want to do. We're here to learn from each other. If you're already in trading, I'd love to hear back from you. I told you I wasn't bullshitting about the notepad, so get your notepads, be ready. We'll crack on next week. We're going to hit into Webull. We're going to go through Webull completely. We're going to talk about the different indicators like the RSI. We're going to talk about the moving average. We're going to talk about the Bollinger Bands, and we'll get right into it. So, like, comment, share, subscribe, whatever you do. Thanks for watching. I'll see you in the next one.